Hello again, and welcome back to another daily technical analysis video. In this video, we're going to be analyzing Ethereum. Now, we're going to work our way from the macro time frames of the weekly time frame, then the daily, then the 4-hour, and the 1-hour as well. Now, on the weekly time frame, we can see that we have started to see that bottom coming in potentially right here, and we have risen thus far. Now, given this current week, we did break above that weekly pivot of that green horizontal. And as of right now, we are seeing that retest potentially of it. So I believe, just by the looks of it, we still haven't yet to retest it. So we could see a further decline, a little bit more down to $30,000, approximately there, 3,100 if you want to round that up. What I really like about this, not only is it the weekly pivot, but it's also in confluence with this previous breakup level, where the price action on the week of the 21st of March, where it broke above this previous level. So it is likely that we can see that break and retest before continuing to the upside. Now, I'm still siding for the bulls because of the fact that the weekly stochastics just crossed up and still has a lot more room to expand. As for the RSI though, it is in that upper neutral territory, but we want to see it break above this 50 moving average to add further confluence towards the upside. Nevertheless though, we could see a break and retest, something like this, stop below the previous low, and we could aim for even close to the all-time highs. And even then, if this is just a macro swing, that's 2.19 risk to reward ratio, which is pretty good. But the thing about it is that you got to note that this is going to be a longer time frame play because we are on the macro time frame. Okay, now the EMAs are starting to look bullish as well as they start to turn and cross towards the upside. Right, we had that 1050 cross back up, and we could still see that retest of that 10 white moving average. Okay, so we still see that potential, just a small retracement as of right now before continuing to the upside. Now, moving our way to the the daily time frame, we see again we are still above this daily pivot, which is also a bullish sign, and this daily pivot is above, higher than the previous daily pivot. Right, that rise signifies bullish strength, and we are still holding above it. We want to see the price action actually hold above it for it to be bullish still. Right, now one thing that does concern me is that we did break this previous low. This is the previous higher low, and now we broke below that. Now we could see potentially a larger consolidation or pattern here, which is more favorable for the bulls, and I'll explain that later. But we did break this level here, so we want to be careful that we just see that retest before coming back down. Even then, that could just be a 1, 2, and 3 ABC retracement right to that daily pivot. But we are still aiming for that daily pivot to be hit, which is also in confluence with that 55 yellow moving average. Now, I believe it still lines up with the weekly pivot as well. So around this range is where we want to be seeing for potential buys towards the upside. Now, the RSI is a little bit choppy, but we want to see how the closure works. Based on the next 36 minutes, let's see if that RSI does close above the 50 blue moving average. This would add more confidence to the upside as well. But I typically want to wait for at least 2 days above it, 2-day closures above this 50 moving average to confirm more strength for the bulls. Okay. Now, what is good thing though is that the stochastics has been overbought for quite some time and could potentially be crossing back down the 80. Right. I want to see it come back down and potentially consolidate in this region as a reset before the next push up. And this is kind of why the dip did come, because we want to the price action did fall because of that, the need of reset of this overbought stochastics, right? So we could potentially rise a bit, but stay around this region to help reset that stochastics as well, and that would be bullish too. Now our moving averages are starting to cross back down. We want to be careful what happens here. It is potentially going to clump together, but as of right now, I would say there's not much to be told about it, except for that the 55 could be the next support as it lines up with those two. Now, one thing I do want to pull out is this Fibonacci retracement from the bottom of this entire impulse to the top. Okay, now what I can see is that we are currently bouncing off that 0.382. So we want to see how it works. Maybe it's just a temporary bounce or a full out reversal. So we want to pay attention to how this level plays out. And if not, then we can see. What I really don't like is how the 55 is below this, right? So we could just dip beyond that pivot, unless you want to redraw it. What we can also do is redraw it from the last impulse, right? So this is the last impulse after a larger dip and after this one. But essentially right now it could be the 55. This one's a bit more better because of the fact that it lines up with the golden pocket, right? If it's the closest retracement, and we do see that golden pocket also in line right here. So this is a critical level from the golden pocket all the way down to that 55 moving average. We got the moving average is 1, the HP, the weekly pivot, as well as the golden pocket as a 4-piece of confluence that we want to pay attention to what happens in this level. Okay, now to make things cleaner, I'm just going to quickly switch this up to the golden pocket and also hide this as well. Okay, so that's the retracement level we want to pay attention to. Now there's not much left on the daily, but potentially that rise and before a further decline to this level that we're paying attention for. Now on the 4-hour, we can see that it's clearly towards the downside. We did have that downtrend, not much of a consolidation in between, just a short one before continuing down. And we've broken down past this, the hourly pivot as well. So we want to pay attention to how that happens, what occurs after the week, whether we do see quick dip and then push back up or something like that. Because then since we are below this weekly pivot, we want to be, this hourly pivot, we want to pay attention to see what happens in the next week as to whether that pivot is going to be lower or higher. Now, one thing you do want to pay attention to is that the stochastics is oversold. So this just means bear strength. So we could see more towards the downside. This actually adds confluence to what I'm going to show you in the hourly time frame. Now, the 50 moving average clouding over this RSI as well adds further confluence towards the downside, so we could still see more towards the downside. Now if we pull out our EMAs, we did get that 1055 cross already, and we are bouncing off of this 10 moving average. Because this is generally towards the downside and the EMAs are towards the downside, we can see that there's higher chances and likelihood of actually coming down to the 200 red EMA as well as the blue 377 EMA. What I really like about this blue 377 EMA is that it lines up with that the hourly S3 as well as that weekly pivot and that daily level where we had a lot of confluence that we were watching for. Right now, what's very exciting to me is that on the hourly we could see more towards the downside. EMAs are a little bit iffy, but we are getting rejection off that 377 and 15 moving average, exponential moving average. As of right now, too, we still got 32 hours, so or 32 minutes, so we can't really say anything. But this looks like a strong sell-off. Now, what I like is this, right? We potentially have either a flag, you can call that, or a channel, a symmetrical channel, or a rising wedge, right? So this is just a sideways consolidation range pattern before continuation. We do want to see whether it closes below the bottom trend line or the upper trend line to direct which way that the price action will go, but it's likely that we are going to get that push towards the downside given the factors that we just discussed on the 4-hour time frame. Now, if we do a target, assuming that we do break around 70% of this pattern, then we do see it exceeding the target that we had, right? So that's one thing we want to pay attention to. Maybe it gets stopped there sooner, but we want to pay attention to the 2999 something level right there. Let's see if it lines up with anything else. Not entirely. So this might be just a whack aim, but it does seem likely we will be hitting this level. But then again, that's all canceled if we do get that closure above this trend line and see continuation towards the upside. Now the hourly momentum as well adds confluence to it, right? We're rejecting that bullish territory from the 70 to 80, even from the 70 from the 80, this bullish territory. We're rejecting it with that cross down, so this could add more confluence towards the downside, right? We still got room to expand towards the downside. Now, on the contrary, though, the RSI is above that 50 moving average blue and within the neutral territory. It doesn't really gauge the direction, but because we are above this 50 moving average, it could pressure towards the upside a little bit. But again, by chances, it seems likely that we will be breaking towards the downside. And again, I'm aiming for the range of 3,100 to 30,000, or sorry, 3,056, 50, 60, 30, 60. Okay, so this range is what I'm aiming for. Now, this is not financial advice, so tread carefully, and this is only for education, so do as you desire, but I'm not telling anybody to do nothing. Now, that's it for this video. I hope you enjoyed it. I hope you learned something from it. Please like, subscribe, and hit the notification bell for more videos like this one. Cheers.